Let's now go across to a very important management. Kirloskar Oil Engine, Gauri Kirloskar, MD at the company, is now with us. Sir, ma'am, to start with, your revenue targets for FY25 is 6,500 crores. In the last 12 months, you did a revenue of about 4,800 crores. Which sector or segment do you think will contribute to this incremental growth?
So the 2x3y strategy that we announced last year is our ambition to grow and double our top line to 6,500 by FY25 with double-digit margins. There are several reasons why we feel this is possible. The first is based on the domestic and the international demand. We feel it's possible because of the robust domestic demand that we're seeing with the government's push towards infrastructure, as well as the higher levels of power deficit that we are currently seeing. On the international side, our aspiration is to grow our percentage of international revenues as a total of revenue. And we feel this is possible given that the advancing of Indian emission norms now make our products globally relevant. Second, we are also looking to expand our product portfolio in the higher horsepower segment, where we are seeing the most significant growth in the power gen segment. And we also believe there's an opportunity to improve our service penetration as our products become more technologically advanced. So these are the major drivers that we're seeing that will get us to the top line growth.
In the last 5 quarters, you have expanded your margins close to 16%, which used to be sub 10%. Is there further room to do the same?
Sure. So you're asking about improving margins and our potential to improve margins. So margins on the B2B side of our business, which is the engine and the engine related side of our business, are driven by 3 things. They're driven by export sales, they're driven by aftermarket or sales on the service side, and they're also driven by sales of higher technology or higher horsepower products. So our strategy that we have communicated focuses on these 3 things. So we do expect to see an improvement in margins over time and in the long term. On the B2C side, which is our pumps and allied products and the farm mechanization business, our strategy is a bit different to improve margins. Here, what we want to do is focus on operational efficiency improvements at the plant, as well as volume gain or market share gain, which is what will improve our margins there. We also have a strategy of planning for capacity ahead of demand. So as the 2x3y strategy unfolds, the capacity is ready to meet the demand. So we also expect volume leverage benefits to kick in as well.
Right, Gauri, this is Vinny joining in the conversation as well. And Gauri, we want to also know in terms of the CPCB 4 norms that will be implemented from the 1st of July. So is the company on track to implement the same? What is the kind of business exposure here that we're seeing?
Sure. So our power gen business is what is affected by the CPCB 4 plus norms that kick in July. And that's about 38 to 40% of the total revenue of our business. So in the past, emission norm changes have happened, right? And we have handled these through our in-house R&D. And that is the same strategy that we're following for this emission norm. And we are on track for the deadline that is coming up in July.
Also, just what is your current capacity utilization, and are you planning any big capex to support the growth then?
No, so our current capacity utilization is in the range of about 70%. And the way that our plant works is it's ATPP, which is assembly, testing, packing, and painting. So there's no additional, significant capex planned for plant.
Moving to newer segments, water, biotech, waste management, induction motors, firefighting pumps. What is the current revenue of these segments that you're generating now, and what can be the potential number?
Sure. So firefighting pump sets, we are FMUL certified, and that is something that we sell in international markets. And that's a pretty significant percentage of our export revenues. On the other hand, the organic waste composter and the electric motors are businesses that have just been started. So it's more an incubation business where we see potential over the coming years. But today, it's a very, very small part of our portfolio. On the organic waste composter side, the idea is really to have a sustainable solution that has the same customer segment as our power generation segment. So if you look at residential societies today, they've been mandated to buy such products. And that is the market that we're targeting there, and it will only pick up over time. On the motor side, it's more about when we look at the technology transition that's happening in our industry, we are following 4 tracks on the technology transition, and one of them is electrification, and this is just a small start on that track.
Okay, and the ARKA FinCap in the first 9 months of FY23 has actually achieved a net profit of around rupees 50 crores. Where do you see the profit number by the end of FY23, and what is the growth target for FY24? If you could give us any understanding on that, and also any fundraising plans here then.
Sure. So, I'm not going to comment on specific forward-looking numbers, but what I can say is that Arka's current assets under management stand at around, and will stand at around 4,000 crores by the end of the year. The initial equity commitment by KOEL was about 1,000 crores, and we will be nearing the end of that commitment. So the plan really for Arka is that, now that it's a stable business, over time, it will look to raise external funds to grow its book. And eventually we would want to see the business stand on its own over the next couple of years. But in terms of specific, profit numbers, those I'm not going to be able to quote right now.
All right.
All right. Thank you so much for that, Gauri, for joining in with us this afternoon. That was the management of Kirloskar Oil for you all.